Welcome to Spiedel's Federal Tax Minute. I'm your host, Catherine Sedan. This week we're covering some considerations following the recent beneficial ownership reporting suspension. Sign up for Spiedel's quarterly federal tax update webinar and you'll get reliable and pertinent updates on trending tax topics. Register for the 2025 quarterly federal tax update by the end of the day on December 31st, 2024, and save 20% using discount code QFTU20. You can get more information at spiedel.com under webinars. On December 3rd, a federal district court in Texas issued a nationwide preliminary injunction against enforcing the beneficial ownership reporting requirements mandated by the Corporate Transparency Act, or CTA. The court ruled that Congress exceeded its authority in enacting the CTA, which resulted in an unconstitutional infringement on states' rights to regulate businesses. The injunction prohibits FinCEN from enforcing the January 1st, 2025 reporting deadline for all reporting companies, as well as all other reporting requirements under the CTA. It's important to inform your clients of these developments and to be clear with them that they are not required to file any reports with FinCEN, whether it's the initial beneficial ownership report or a corrected or updated report. FinCEN has acknowledged that in light of the ruling, it will not impose penalties against any businesses for failing to file these reports while the preliminary injunction is in place. However, FinCEN will continue to accept BOI reports from businesses that choose to file despite the preliminary injunction. For businesses that choose to voluntarily file BOI reports, here are the answers to some frequently asked questions Spiedel receives about BOI filings. Generally, trusts and general partnerships should not file a BOI report. Only those entities that are required to file organizational or registration papers with a state's Secretary of State office should file a BOI report. Only the following entities qualify for the tax-exempt entity exemption from the beneficial ownership reporting requirements. IRC Section 501C organizations exempt from tax under Section 501A, which includes HOAs that file organizational papers with the Secretary of State's office if they qualify as a tax-exempt social welfare organization. However, it does not include HOAs that are tax-exempt under Section 528. Also exempt are Section 527A political organizations, Section 4947A charitable trusts, and certain entities providing financial assistance to such entities. In community property states, spouses of beneficial owners are also considered beneficial owners if they themselves do not have an ownership interest in the business, but only if their spouse is a beneficial owner due to owning at least a 25% interest in the entity. If the beneficial owner's spouse is considered a beneficial owner only because they exercise substantial control over the business, their spouse is not considered a beneficial owner due to the community property laws. If an entity was dissolved prior to January 1st, 2024, it does not have to file a beneficial ownership report. However, entities that dissolve after December 31st, 2023 are subject to the BOI reporting rules. An entity does not have to file an updated report once it dissolves. And last, the beneficial owner or reporting company has to provide a renewed driver's license, passport, or other form of updated identification only if the information on the identification document changes, for example, the individual's name or address. We'll be covering this topic at Spiedel's Federal Tax Update webinar, along with everything that happened during the year that you need to know to be ready for filing season. See a full list of topics covered and get registered at spiedel.com under webinars. That's all for this week. Join us next time for another episode of Spiedel's Federal Tax Minute.